Hello, so we're just going to give it maybe a little bit of time to wait for a few more people to filter in slowly, I think, as they find the link to join. Hello, everyone. So welcome. I'm Serena. I'm the president of UCL Fintech Society, and I'm moderating these this webinar series. So welcome to the second episode. Today, we're going to be talking a little bit about crypto, about blockchain, and about decentralized finance in general. I'm personally very excited and interested to hear from some of the speakers we have today, as I think it's a really exciting field to be looking into. So it is once again live. So if you have any questions or concerns, you're free to comment, whether you're commenting on Facebook or on YouTube, and we should be able to see those comments coming in real time. So if there's anything particularly interesting or salient, I might point it out to the speaker or just myself and comment on it a little bit. So the very first person we're going to let take over is Dr. Jane Thomason. She will be speaking a little bit today about just to introduce some of the ideas in blockchain in general. So hopefully she'll be able to contextualize a little bit about some of the ideas that we're going to be seeing over the next hour and a half. And then that way we won't have to be reinventing the wheel every time a speaker comes in. So I'm going to, if you give me a moment, let Dr. Thomason. It seems like we might be having a little audio problem. Sorry, let me see if I can sort this out right now. My apologies. So, yeah, Dr. Thomason has had decades of experience, by the way, in just blockchain and fintech and startups. So we're also going to hear her, by the way, speaking next week. All right, let me see if it works this time around. Having a little bit of technical issues. Okay.
Welcome to an introduction to blockchain. I'm Jane Thomason. What is a blockchain? Next slide, please. A blockchain is quite simply a ledger of facts replicated across multiple computers assembled in a peer-to-peer network. Those facts can be anything from monetary transactions to content signature. Members of the network are anonymous individuals called nodes, and all communication inside the network takes advantage of cryptography to securely identify the sender and the receiver. And when a node wants to add a fact to the ledger, a consensus forms in the network to determine where this fact should appear in the ledger. This consensus is called a block. Next slide. One of the reasons that blockchains are getting a lot of attention is that they have several key features which are going to enable them to practically add value to many, many sectors. So one is it's almost immediate. They can deliver faster services. It's highly secure because it's a decentralized network. Therefore, there's no central server to hack. It's efficient and it's transparent because once the block's on the chain, it's time-stamped and it can't be removed. And it eliminates the need for trusted third parties. Next slide, please. So just talking about some of the words that you've probably heard around blockchain, you will have heard of a whole lot of platforms, and you will have possibly heard of Bitcoin, which is the most famous, which is a peer-to-peer distributed cryptocurrency. Ethereum, which is a platform which hosts a number of different applications, including Ether, which is another cryptocurrency. Hyperledger, which is a private blockchain, which is being used a lot by business, and then Monax, which is another. But having said that, there would be at least 50 different blockchains that are being used at the moment. Let's move on to the next slide because there's a concept that's really important in blockchains for you to understand it in terms of their application in a number of different industries. So if you think of a contract in our traditional terms, it's a promise that the signing parties agree to make it legally enforceable. Next slide. However, smart contracts are not that. A smart contract is a promise that the signing parties agree to make it technically enforceable. So in effect, it removes the need for a judge or any authority because it's basically a piece of self-enforcing code that can automate steps in a chain. So for example, if X happens, then Y takes place. So let's say, for example, in a certain process, you have met the requirements of to trigger a payment. So let's say AgriLedger, which is an interesting one, which really rapidly improves the payment cycle for farmers in agriculture. The minute the farmer delivers the grain and the grain is weighed and certified, a smart contract automates an immediate payment. So there's no invoicing, there's no 7-day payment terms. The smart contract enforces immediately. So that's a really important concept, which is relevant throughout many of the use cases that we'll be talking about. So let's just have a look at what some of the key use cases of blockchain are. So next slide, please. So most people hear about blockchain and they think about Bitcoin and cryptocurrencies. And indeed, this is a very important application of blockchain, but it is absolutely not the only one. So speculative cryptocurrencies, we'll talk a little bit about that. They are built on a blockchain, but there are many, many other use cases that we have that are going to really benefit from blockchains and already are. So two that we'll be thinking about right now, because we've had the COVID pandemic, is supply chain, because supply chains have been fractured and there's been problems with provenance of things like personal protective equipment. Health and health records, provenance not just of PPE equipment, but of foods and of wines and of diamonds. There are projects for those. Transportation, voting, energy, taxation, welfare payments, government engagement with citizens, land titles, registries, industry creation. So blockchain can provide a foundational layer for many, many types of services that we rely on in our day-to-day lives. So let me run you through with the next slide some of the non-financial use cases, because probably one of the fastest moving areas outside, again, of cryptocurrencies is in financial use cases, and we'll come to them. But if we look at secure digital content, document storage delivery, digital identity, we spoke about smart contracts, authentication and notarization, marketplace, real estate, reviews and endorsements, gold and silver, diamonds, network infrastructure and APIs, application development, and blockchain in IoT. And then underneath each of those icons are companies that you can look up who are working in these areas. So having a look at the financial use cases, currency exchange and remittances are a very important and growing use, particularly in emerging economies. Peer-to-peer transfers, because it allows direct peer-to-peer transfers without any middleman. Ride sharing, trading platforms, gaming, and data storage. So let's move on and just talk about a few of these use cases. And I apologise if I'm going fast, but this is a big overview. So let's just start with the Bitcoin and cryptocurrencies. So this actually started as a response to the global financial crisis, and it was very much a reaction to that. It was an anti-government, anti-bank movement, and so the cryptographers created this digital cryptocurrency that was decentralised and operated in a peer-to-peer network. So it didn't need governments and it didn't need banks. And so there was a very kind of libertarian viewpoint and philosophy that went along with early proponents of Bitcoin. And then if you have a look, this has obviously grown from Bitcoin to many other cryptocurrencies. And I've just got the top 5 on the next slide if you have a look. It's very volatile at the moment. The market cap's actually gone down because the value of a lot of the cryptocurrencies have gone down. But you'll see that you've got Bitcoin, Ethereum, Tether, etc., you know, the top 5, but there are some thousands of cryptocurrencies that are being traded on exchanges at the moment, and you can have a look at what they are. The other phenomenon, if you move to the next slide, which was a very interesting part of the history of blockchain, was the phenomenon of initial coin offerings. And this was something that was created to allow startups to raise money through cryptocurrency, through offering investments in their project through something called an initial coin offering. And this was raising funds by creating their own cryptocurrency. That cryptocurrency would be offered at a discounted rate before it hit the exchanges, and the value is created and settled by a network of participants rather than a central authority, and startups can open source or put their project under a not-for-profit foundation and raise money. Now, what in fact happened, and some of you will know, is that absolutely incredible amounts of money were raised in 2017, 2018, up to, next page please, up to actually $4 billion, which was for EOS by Block 1, but you'll see some of the other very large amounts of money that were raised, 258 million, 257 million, 232 million. So this was all the rage until the US SEC, the regulator, regulated that these were in fact securities and came under US securities law, which meant that this somewhat wild, unfettered raising of large amounts of money by people who sometimes didn't even have a project. They just had a white paper and they promoted that through conferences all around the world, started to become regulated, and you see very few ICOs anymore. People are still looking at ways of raising money using the same principles like security token offerings and so forth, but we don't see the ICOs. But, you know, the early days of blockchain was exciting. There was a lot of money around and people largely associated with cryptocurrencies. But moving on now, what we're seeing is, if I would say, a maturing of the industry, with people working on real and serious projects, both with government and in areas like finance and supply chain, and absolutely with COVID healthcare. So just running through a few use cases here. The first one is an Australian startup called Civic Ledger that works with government and essentially works on putting government registries on the blockchain. But what they also do, which is really interesting and I think will become increasingly important in times of water scarcity, is they have a water trading platform that allows countries and areas that suffer from water scarcity to be able to track and monitor the use of water, and Australia is one of those countries. Another one, if we'll go down, is accounting, and I think that this is a really interesting one, because almost my screen seems to only have me on it now. So I'm going to keep on talking, hoping that we're going to find the screen again. So the use case for accounting is standardization will allow automatic verification of data in financial statements. Costs and time of audits will decrease. Fully automated audits may be possible with absolutely improved efficiency in transactional accounting. It will replace bookkeeping with reconciliation work, and it will mean profound changes for auditors, because the lower levels will be automated and auditors will need to make a strategic assessment and be able to review the code and the smart contracts and so forth. So accounting will be profoundly changed. Similarly, if you move on to the next slide, invoicing. I talked to you about agri-digital, and this is one where you're automating the invoice payment using a smart contract the minute that the transaction is confirmed that the payment can be made. And one of the ones that I love, because I travel a lot, is thinking about travel insurance for a delayed or cancelled plane. So you've got on the plane, you're sitting in the seat on the tarmac, and the captain announces that due to a technical fault, this flight will be cancelled. The minute that that's notified, and even before you get off the plane, your payment of $500 is in your wallet. So that's the speed and possibilities of the automation of things like insurance. So let me move on briefly to what we call the digital blockchain poster child, a small country called Estonia. Some of you may have heard of it. And it is one of the countries that has the highest ease of doing business, because about 15 to 20 years ago, they decided they would go entirely digital. They have a single digital identity for citizens, and all tax reporting and most interactions with government are online. It only takes a few hours to start a company, and you too can become an e-resident of Estonia in about 20 minutes and start doing business in Estonia. It's a fascinating use case. It's built on blockchain. You really should have a look at it. So let's look at another one, which is around procurement. And I want to emphasize that the way that I see it is that blockchain will be a kind of underpinning of many, many applications, and it will generally be used in concert with other digital technologies like AI. So this was a really interesting example for procurement, which was done with the US government department in major procurement, where you have major financial assessments of tenderers. And what they found using blockchain and AI was they were able to slash the contract award time from 100 days to 10 days. So it really can produce significant efficiencies in terms of government services. So my last comment, I'd like to leave you with a thought about the possibilities that blockchain offers to the future connected organisation. So it provides secure permissioned access to data. It's fully auditable. It's tamper-proof because it's decentralised. There's no central database ownership because it's distributed. There's easy access for data sharing. It's interoperable with a single digital ID, and you can onboard additional jurisdictions very easily. And there's this whole paperless layer for digital transactions. So you can almost think of any industry that you like and think about how this is going to add speed, transparency, efficiency to the way that organisations work. And Next week, I'm going to be talking to you about some of the applications where I believe that it's going to be a significant benefit to humanity, for social transformation, for the achievement of the Sustainable Development Goals. So just leave you with this slide, which is thinking about all of the changes that are coming upon us with blockchain. If anything, the COVID pandemic has absolutely accelerated this. Digital companies and blockchain companies have pivoted, and they're already providing their platforms in so many different ways, whether it's healthcare or data analytics or provenance or supply chain or remote care for people who are in isolation. The COVID pandemic has had the unexpected consequence of accelerating the digital transformation. So thank you very much for listening, and I look forward to speaking to you at more length and live next week.
Great. So that was Dr. Jane Thomason, who was very kind and contributed just a little bit of background for all of us to take into the next few sessions where we hear from some more exciting people. And the next person who I'm very excited to introduce, we've got Mr. Julian Sawyer. So he has worked in a variety of roles and is currently working at Gemini. He is heading up the efforts for Europe and the UK, and he previously was a COO at Starling Bank, and he was also a co-founder. So let's please welcome Mr. Julian Sawyer. Thank you very much for being here, Julian. How are you doing?
Hi there. Yeah, very, very good, thank you. And I was very impressed with Jane having to explain blockchain in about 15 minutes. So I think she's done a great job today on that.
Yeah, it was definitely not an easy task, but she was very kind and generous and managed to get it done.
Indeed,
so,
well done for her.
Just to quickly, I suppose it would be nice to know. Yes, thank you for her. But how would you introduce yourself, I suppose, to people who are learning of you for the first time? How would you characterize, I suppose, in a relatively brief fashion, your background and where you are now?
Yeah, I guess I'd probably describe my career to date as in three stages. I was a management consultant when I finished university, working in people like Accenture and Ernst & Young. Then I set up my own consultancy. And then I had an amazing opportunity to join Starling Bank as a co-founder. And I was there for 4.5 years as chief operating officer. And that was going from, helping to fundraise, to getting the banking license, recruiting our first person, all the way to about 700 odd people when I left last year. And then I pivoted again to the third stage of my career in going into crypto and joining Gemini. So Gemini is a US based crypto exchange, and they wanted to go into Europe. So they've asked me to head up our European operation.
Mm-hmm. I'm kind of curious then, what was it that, originally management consulting is quite a different ballgame from something like Starling Bank, right? It's this like challenger, almost tech company like culture. And then jumping from there, even almost further left field into something like cryptocurrencies. What was prompting you to make these progressive changes further into the more, I guess, extreme in terms of innovation fields?
I think if you look at consultancy, I think it's probably a young person's game. So I think I'd probably spent enough time in that industry. I also wanted to do a proper job. I wanted to go onto client side. And so it was the right opportunity at the right time to engage at Starling. I think if you look back at Starling when I started at 2015, everybody said, look, you're crazy. No one starts a bank. No one does current accounts, etc. And you're trying to build something on new technology that's never been done before. And now that statement sounds pretty hollow when you compare, Revolut, Monzo, Starling, and the success that those organizations have had. If you look at where we are with crypto, I think we are in a position where we've got three moving parts that are coming together at exactly the same point that we were in 2015 with challenger banks. I think the first one is that the regulators are starting to engage and are being engaging with the industry. So this isn't something that they've just pushed down the road. This isn't something they've ignored. They are absolutely engaged. And whether that is central bank digital currencies, or whether it is about authorizing the likes of Gemini to trade and providing protection for consumers and everything around that, but they are engaged. What we've also got then is institutions, so financial institutions who are moving blockchain, and I'm using that word very particular, and then the cryptocurrencies that sit on the blockchain, as Jane was talking about earlier. But they've moved that from being in their innovation lab or in their technology function to people who own the P&L. And that becomes really interesting. So what we're seeing is institutions that might not have embraced blockchain and Bitcoin and everything before, that are now embracing. So, you know, even in the last few months since I've been at Gemini, we've done things with JP Morgan, State Street, etc., which is proving that or giving us that proof point that the institutions are starting to look at that. We all know that institutions only do that when they've got customers, you and I, consumers and pension funds and asset managers, wanting to do something within this asset class. And so that is the third element. So we've got regulators, we have institutions, and now we've got consumers, the likes of you and I and everybody that is here tonight, who are starting to think about this as an asset class. And there are three use cases here. There is one which is, I want to trade at an asset that's moving, it's volatile, I want to trade, I want to use it. There's another group of people that say, I want to invest. Okay, it's one of the highest performing asset classes in the last 10 years, so let's put some money in some of these. And the third one is, I want to use this for payments. So if I back up to the original question, I think what we've got here is that these three different forces are coming together, creating what I call the perfect storm. And if you don't have all three, you don't have consumers, then the institutions aren't interested. If the regulator's not doing it, the institutions aren't going to engage. And that, I think, is a pivotal moment. So I think 2020, even though it is and is going to be an incredibly challenging year, is starting to see that pivot, is starting to see this coming into mainstream, in the mainstream conversations that are happening. And that's what we are really excited about, that we try and I think in fintech, there's a real danger that you talk within the fintech bubble, and you talk to everybody else in fintech, and you get really excited, and you look at the people, our parents, our friends who are not in the fintech, and they go, don't understand what you're talking about, just don't get it. Okay. And what I think we want to make sure is that we are talking to people outside that bubble. We want to be talking to, can I say, the normal people, but people who are not absolutely engaged in fintech, who are curious about how to manage their money, but not curious about the technology or the underlying pieces. And I think when you look at something like a Starling or a Monzo or a Revolut, you are now talking about that mass market. You are talking about people who are not engaged in fintech, who don't live in Shoreditch, who now have got these accounts and are banking with these organizations. And I'm seeing where we are with cryptocurrencies, exactly that same pivot point is happening. And that becomes really, really exciting, I think, for us.
Mm-hmm. I'd love to jump on what you're saying. I'll definitely want to circle back around and touch what you talked on when you talked about before about the central bank backed digital currencies and also about regulation. But now that you've just brought up that this year is going to definitely be exciting, and given that this is the cryptocurrencies post-COVID session, I'd love to touch on actually something that Dr. Thomason said. She said that in her eyes, the pandemic is actually having the unexpected consequence of pushing people to adopt these kind of technologies faster and pushing this more into the mind of the everyday consumer. Would you agree with that? Do you think the pandemic is having this sort of effect?
I think absolutely yes, with a slight caveat here, which is I don't think it's going to solve today's problems right now. Okay, in my mind, whenever you have a time of crisis, whether it's a pandemic or a war or something like that, technology accelerates at a exponential rate, and therefore what we're seeing is lots of things happening. I think a comment, it's not a statistic, but the NHS has changed more in the last 10 weeks than the last 10 years. Whether that's true or not, but it does for effect give you some huge amount of change that has happened across a whole range of different industries. So without a doubt, there is new technology coming out, there are more use cases. And I think what we are seeing is that this will be a point when post-COVID people will start to engage. I think they're going to do, I think from a personal perspective, I think there's going to be two major things that are going to happen. And if I just take out those outside of crypto, and then I'll apply it into the world of crypto. So what I think is going to happen is, first of all, that consumers are going to save a lot more money than we have in the past. In the past, we didn't really have enough for the rainy day, and we now know what a rainy day can look like, and it is weeks and weeks and weeks. Okay, and so we probably all need to have a little bit more saving. Secondly, I think there is going to be more acceptance that the government or governments can't keep stepping in, and therefore I need to manage my own money. And if I'm saving some more, I probably need to invest part of that savings rather than just put it in a savings account, particularly with incredibly low interest rates. And therefore, what I'm going to do is be more interested in money, what I'm going to do with it, and managing that. Now, for us on this forum today, that means fintech. That means people engaging with various different products, which can include cryptocurrencies, but it will include a whole range of other things. So I think what we'll see is people who have just put their savings into a savings account and didn't really worry about it are probably now going to start to engage a little bit more into what's that money doing. Is it being productive for them? Are they getting a good rate of return? Are they getting the growth that they require? Because they do need to require it. So I think what we're seeing is, yes, a greater use of technology across a whole range of areas and cryptocurrencies. I don't think it's going to solve anything this year, but what we are going to see is a huge consumer change in money. And therefore, cryptocurrencies, Bitcoin, blockchain, etc., has a role to play in that.
Mm-hmm. Okay, so people are going to start thinking about what are the different ways, rather than people who've always been comfortable leaving their money in the banks. Now that the rates are all the way down, they're going to need to start thinking about other ways to save up for the next rainy day. Now that they, have lived through one. Okay, that's an interesting perspective. And do you think, just kind of quickly following up on that, do you think that that's going to draw people to services such as the ones you provide at Gemini? Do you think people are then going to start looking directly for exchanges and for ways to directly start engaging with these markets?
I think if I was in a sales mode, I'd say absolutely yes. But if I'm in more of an industry commentator mode, what I would say is that I think what people will start to look at, and this is just good investment advice, and I'm not providing advice here, but you need to diversify your assets. You need to be in some very, very stable assets, cash, gold, and you need to be in some more volatile, higher growth assets as well. And that is a known approach to investment management. What I think can happen, and what will happen, is that people will use part of their portfolio in crypto assets, because it has had a huge growth in the last 10 years, as well as putting some money in cash, putting some money in some stocks, putting some money in ISAs and other efficient ways of saving. So and this is what I think is really interesting about our industry, that what we've got is a lot of evangelists who are constantly talking that Bitcoin's going to change the world, etc. What we have got, what you and I have got, is we've got a Visa or MasterCard in our purse or our wallet. It works. We're using faster payments or backs or chaps to pay our gas bill or to get some money or pay our rent, etc. We have a number of things that work, but we also have a number of inefficiencies in the payments world. FX, sending money overseas to family members, paying bills overseas, etc. is just one example that can get better. And so what I think we will have is this pie chart, which has currently got Visa, MasterCard, bank-to-bank payments, peer-to-peer payments. There will just be two things will happen. One is some of those will get powered by blockchain technology. And secondly, there will be a new wedge in there, which will be Bitcoin or Ether or whatever. So it's not, I don't think it's just going to be something that's going to suddenly take over the world. It's going to just grow in significance. Now, why is this important? This is super important because we as an industry get too ingrained in the technology. We talk about blockchain, we talk about hash rates, we're talking about halving, etc. As a consumer, I don't care. I care it works and I care it is secure and my money is in an exchange or a custodian which is super secure. That's what I care about. Is my money safe and secure? I don't care the mechanics of that. Just the same as you don't care the mechanics of how, when you buy a coffee in Starbucks, how do they get their money when you've done a contactless or you've done an Apple Pay? You don't care. You've got your money has come out of your account. You're okay with that, and you've got your coffee. That's all you care about. So I think what we've got to do is communicate into that world, and I think that's where consumers will be starting to think about this is an asset class to use and an asset class that they want to invest or trade in. And I think that is where what we want to do in Gemini is to change the narrative a little bit and to ensure that the narrative is engaging to consumers, not trying to baffle them with technology.
Mm-hmm. Okay, I think that's definitely an admirable goal. I know personally I have a lot of family members, particularly parents and grandparents, who I say, oh, I'm really interested in fintech, and they're like, who is that? So very admirable.
Yeah,
exactly. So you did talk a little bit about how consumers are definitely going to be looking, especially as they delve into this kind of area for the first time. They're looking for security. They're looking something they can trust and something that they know. And earlier you spoke about central bank digital currencies. And I feel like if there's anything that a consumer is going to trust as a first place, it's something that the central bank has said, you know, we're backing it. We know it. We're saying it's legitimate. Do you think that that's going to be definitely a big point moving forward? Do you think consumers are going to look towards central bank digital currencies, and we're going to start to see adoption of this kind of technology?
I think without a doubt, it is something that can only help the industry. I think the way that I think about this in a very simple way is blockchain is the technology and Bitcoin or Ether is the application on that technology. So I think iPhone is blockchain and the app is a Bitcoin or Ether or whatever. So what the central banks are doing are creating apps on technology. So the first thing that's doing is giving absolute credibility to the technology of blockchain. Okay, that is absolutely critical. And I think for those of us in the financial services industry, that is now an accepted set of technologies that is secure and reliable and resilient, etc. What we now have got is the applications of that. And so I think as people will hear that the Bank of England or the Bank of China or the Fed is doing something which is using this blockchain technology, that inherently will give people that comfort that this is good technology to base their financial use on. What you then need to do is then decide what is the application of that. So that is when you look at a Bitcoin or Ether, as I mentioned. Now, the central banks will not be using those applications. They'll be creating their own GBP version or US dollar version, etc. But it's the underlying reassurance that if the governments are doing this, if the central banks are doing this, if my currency is doing this, if my currency where I get paid my salary is doing this, then why can't I do it? So we think this is super important. I think it has a greater impact on the institutions than consumers. Because again, I think it's hard to explain this. And a lot of the central banks are working out what they're trying to achieve here. Are they just doing an electronic money version of their existing currency? Are they doing true cryptocurrencies? Are they creating a different currency to their base currencies? And I don't believe many or any are doing that. So there's lots of different use cases here, but it's all based on the same technology. That's got to help. The institutions will be looking at that and going, if it's good enough for the Bank of England, it's good enough for us. So how do we engage? And our role in Gemini is about creating a piece of infrastructure. So we effectively are an infrastructure play that matches people who want to buy and people who want to sell, and put that together in a very, very secure, very, very high speed, resilient infrastructure. That's our job. So we're like the London Stock Exchange. You probably have shares. You've never engaged with the London Stock Exchange because you've engaged with other people, whether they're fintechs or brokers or whatever, to buy some shares, etc. You might have even just done it through a pension or through an ISA, and that's super important. That our role in Gemini is to be that person or that company in the middle that is helping create a market within a digital asset.
Okay. So it's probably something that we might not see as consumers directly, but it's definitely going to be there, allowing us to, make the transactions and the investments that we'll be interested in making. Okay, that's it.
Yeah, I mean, I think if you look at the Bank of England, it has two major payments systems. One, it took over the CHAPS payment infrastructure probably 4 or 5 years ago now, and we know that CHAPS is used for very large payments, but it also has RTGS, which is the real-time gross settlement system, which is where the banks move money between themselves, and we're talking billions in a transaction, not just what you and I want to pay each other. So we're talking a huge infrastructure that you and I cannot get to RTGS at all. It's absolutely closed, and it's only there for the very biggest banks. And so therefore there is this whole infrastructure that the Bank of England doesn't have to explain to you and I, plus also it is there for a particular use case. And that is, I think, where that use case will be, and it will not be a consumer-led initiative.
Mm-hmm. Okay, so it's going to be institutions first, and I suppose along these lines, if it's going to be the institutions playing the biggest role, then I guess regulation is going to be absolutely central to how this ends up playing out.
Yep.
And I'd love for you to talk about some of the regulations happening in this space. I mean, I don't think anyone is going to be surprised to hear that finance and financial services is one of the most aggressively regulated, industries in the world, but specifically cryptocurrencies or a cryptocurrency exchange. There's a lot of fast moving regulation in this space. Like we've had already this year, the 5th money laundering directive that came out that was implemented now earlier this year. And then the 6th one is going to be happening at the end of the year. So it won't even be in place for a full year before we're moving on to the next one already. So, what's changing between those? What was happening in the first one that needed to change for the second one? And should we expect the next one in the next few months? I mean, how is this looking if it's so fast?
So I think I want to address this in a slightly different way. I will come back to your direct question. I think when you look at the exchanges, and there's a whole range of exchanges in the world. If you look at someone like a Crypto Compare who ranks all the exchanges, and you look at the AA exchanges and the A-rated exchanges, and then there's Bs and Cs, etc. Only 1/3 of transactions of crypto are in the As and AAs. So therefore, the exchanges that are seen to be good, strong, robust, secure, everything that we all think we want to keep our money, only has 1/3 of all the cryptocurrency transactions. So what we have to do as an industry, or all those of us who are AAs and then all the A exchanges, have got to educate everybody about why are you putting your money, why are you trading in something that is not secure? Okay, so that is really, really important. I think if we then look at regulation is there for protection. It is to protect consumers and institutions, and also financial stability, the market's stability, from things going wrong and bad people and bad actors playing in this space. So we at Gemini absolutely embrace this as what we need. We're regulated in the US, and we're applying within the UK for that process. We see this as what I would call a hygiene factor. You should not have an exchange if it is not belt and braces from a regulatory perspective. And I think over time, consumers will be educated. We need to help and inform what good looks like and what not good looks like. And so regulation is critically important. Now, I think when you look at this from a European perspective, I think the piece that we are as a European Union, and we can still talk about that for a few more weeks and months. What I think we have got a slight challenge on is their interpretation and implementation of the Fifth Money Laundering Directive is not the same across all markets. So Britain has implemented 5MLD on the 10th of January this year. There are some countries that haven't. Other people have incorporated it in a different way or interpreted it in a different way, maybe going deeper or maybe wider to the problem. And what we, I think, would welcome, and we can't have global regs, we know that, but we want to try and get good regulation that is consistent across all markets. Because if you haven't got that consistency, what you're going to have is those exchanges going to the weaker environment where they can continue to trade, where consumers don't understand that that country has a weaker regulatory perspective, even if it's in the European Union, as opposed to another country. And so I think there is an education perspective on consumers, and there's an education and a lot of activities which we are playing our part in as well, with the regulators, with the trade associations, both in the UK and across Europe, and also obviously our colleagues in the US spend a huge amount of time on this, really trying to help understand and inform. This is a new industry in a very established and, as you said, very well regulated. And what we need to know is to fit into that world and be more like the regulated world. We absolutely support that. And yes, 5 MLDs come in, and there'll be 6, and there'll be 7, and there'll be 8 MLD at some point. It's part of the joy of working in financial services.
It definitely sounds like a joy. All right, so today is quite the packed timetable for us. So yeah. Unfortunately, we weren't able to ask as many questions as I think I would have liked, but hopefully we'll able to have you come speak for us again later on during the academic year. That would make us very happy. I've personally found this very interesting. But now if you can just leave us briefly, if you have any thoughts you'd like to leave students who might be listening, or young budding professionals, any thoughts that you think, you know, this is something I want people to come away with, maybe about cryptocurrencies, maybe about the space in general. Some final.
I think the thing that I think is, we talk about fintechs, we talk about banks, we talk about crypto. Don't put them into 3 buckets. They're one bucket. They are financial services helping consumers manage their money better. And that could be through a better customer experience like Starling. It could be through more products that a HSBC or RBS would have, or it is about different asset classes with crypto. Don't put them into separate buckets. They are all one. And think of them as a holistic set of how we can make financial services better and more accessible to people. Crypto has a big role in that. So does fintech, and we've seen a lot of that in the past few years, but also the traditional banks. So when we talk about financial services, include fintech, include crypto, and vice versa. Fantastic.
Thank you so much, Julian.
I appreciate it. Thank you for your time
I'll
today.
Definitely be looking forward to speaking to you more another day. Because fantastic. I think you've left some really interesting insight. All right. Thank you very much, Julian.
Thank you very much. Bye-bye.
All right. So Julian has left us with some really exciting stuff to think about. And I think that's definitely something to take forward and to think about. Talking about especially the adoption and the different distinguishings that are happening within the space and within the types of spaces. But now we're going to be moving along into our next section, which is going to be a panel. I'm very excited about this. This is going to be about decentralized finance. Now, this is something I think a lot of people don't really know about, but that has like almost limitless applications. So we've got 2 people from some very exciting firms in the space. I'm going to welcome them, and they're going to introduce themselves a little bit so you guys can get to learn a little bit more about them. But we've got Gustav Arentof, who's going to speak to us from MakerDAO. And then we've got Sokolin, who's going to speak to us from Consensys. Hello and welcome.
Hey.
Hi, how are you? Good to be here.
Hello, thank you so much for being here. So I think we'll start with Gustav, if you could just talk a little bit about where you work, what MakerDAO does, and what your role is. That would be great.
Sure. Thanks a lot, Serena. Yeah, so my name is Gustav. I am Danish. I work for MakerDAO, which is currently the project, the decentralized finance project with the most assets in the protocol. So we're kind of the market leaders in what's being known as like the DeFi space. My role specifically, I manage the European business development for Maker. I also do a lot of our projects in Africa, and last year I also did most of our projects in Asia. So I really work on the partnership front, which is where I see a lot of projects coming in and wanting to interact and integrate with the system. I kind of like have a pretty good holistic view of the entire like ecosystem. A lot of the Ethereum finance applications, DAIs is by far the most used stablecoins in these applications. So it kind of like it's like a nice way of like having like the funnel of everything that comes into DeFi via Maker. Maker is a protocol. It's really like a baseline, like a standard for what we think is needed to provide the necessary infrastructure in the DeFi space. So the way that you can really view Maker is kind of like this stability protocol that kind of like sits right above Ethereum and enables stability in the Ethereum finance applications in a decentralized and trustless manner. How it's being backed is something we can get into a little bit later, I think, but it's really being able to provide the necessary infrastructure for these applications to live in Ethereum.
Great. Thank you, Gustav. And Lex, if you wouldn't mind just talking a little bit about yourself, what you do at Consensys, and what Consensys does as well.
Sure, of course. Thanks so much for having me. My background it actually spans from Wall Street, early at Lehman Brothers, just in time for it to collapse. Then in fintech entrepreneurship for about 10 years. I built a digital wealth management company, a robo-advisor in the United States, and then moved to London about 3 years ago, and then joined Consensys, where today I wear two hats. The first hat is I'm the chief marketing officer there to tell the Consensys story, and then second is I head up I'm a co-head of a business called Consensys Codify. Codify standing for commerce and decentralized finance, which focuses on providing tools around protocols like the one Gustav described, and trying to make it understandable and accessible, and creating bridges for traditional financial services companies to bring assets into the digital asset and the decentralized finance world.
Okay, great. So that's really exciting. It seems like from what I've seen from your online presences, the both of you do a lot of work to do with, awareness, with explaining a little bit about the ecosystem and the world to people who might know less about it, or explaining exactly what role your companies play in that in general. So for some of the people who might be coming into this a little bit blind maybe, or a little bit confused now because there's been some talk about decentralized finance, but they're not too sure exactly what it is, how would you explain it? And maybe what are some examples of applications that would really get through to the layman or to the student who knows they're interested in technology but isn't exactly sure what decentralized finance is or how that might connect to them?
Sure. Maybe should I
yes,
go first
please.
again?
Sorry.
Okay, perfect. No worries. Yeah. So decentralized finance is really about being able to provide financial services without having a centralized counterparty. So, for example, in the Maker protocol, you could say that like the counterparty is the network of the protocol. So it kind of like takes, we often say that we have built something where we have taken like the inherent values of what Bitcoin set out to be, so it's this like decentralized peer-to-peer network, a way to, store and transfer value across the globe. And then we have added stability to it. Because we believe that, for everyday people, they cannot deal with the volatility of the crypto assets in general. It takes a special kind of person to put all their money and savings into assets that, easily can go up or down, 30 to 60% in a day. So decentralized finance, I feel for me, is really where we take like the application of like the store of value as well as the financial services on the blockchain, and we put it into a format that actually is usable for people. I think for us, like some of the most important parts, and also where our markets are the most interesting, is in developing economies. I before I joined Maker, I've been with Maker for close to 2 years now. But before I joined that, I worked and lived in Buenos Aires in Argentina, where I experienced firsthand how my salary in 10 months dropped 60% because of the local inflation, and that was how I really got into crypto. And back then, there wasn't really any of these trustless stablecoins to work around with. So for me, like my personal goal, and it fortunately also aligns quite well with the mission of Maker, is that we really want there to be an alternative, right? You should not be dependent on your local financial infrastructure, on you being able to have a positive life on the finances, right? So that's really like where we come from. We really want to create these like unbiased systems where it doesn't matter, where you're from. In traditional finance, we often see biases against things such as race, religion, current location, and origin. And these are the things that we really want to, completely remove, right? We don't believe that just because you're from Denmark or the US or Argentina, you should have different financial opportunities. So we really want to create these like unbiased systems. So there's like equal access to the same services and equal opportunity.
Yeah, great. I feel like that was very thorough. So I'm not sure how much space Lex is going to have to jump in there. But I mean, if you have anything to add or anything you'd like to pick up off on that, I would love that, as well as having also, because I know Consensys is working with this a lot, if you'd like to introduce us also to the idea of Web 3.0, this almost third generation of web, and what that means, in relation to the previous generations, and what that's going to mean for us moving forwards in terms of applications as well.
Sure. And that was indeed a very inspirational framing for DeFi. I sometimes go back to just like the simplest description of what finance is, because it can get very abstract for people who are not always living in it. And so finance is exactly like any other product. There's nothing crazy or special about it. It does some fancy things, but imagine you're going into a restaurant. When you used to go into a restaurant, I haven't updated my analogies for pandemics. When you go into a restaurant, there's somebody who actually cooks the meal, like they make the thing. Or if you're going and you're buying something from a store, like there's a factory in which the thing is made. And so there's a product. And in finance, that's a financial product. And there are a bunch of people that make financial products. They make bank accounts, they make investment accounts or investment funds. They underwrite loans, they underwrite insurance policies. And so there's a whole series of firms or actors which manufacture financial product. There's also lots of firms and actors that are like the front of the restaurant. So you come into a restaurant, you go sit down at a table, someone gives you the menu, right? So that's distribution. Or you go into a store and you buy whatever's on the shelf, right? That store is the distribution. Or you go on your phone and you buy whatever it is on Amazon. And a lot of fintech has been about distribution and repackaging existing manufactured financial products into new versions of digital stores. DeFi is a rethinking of the manufacturing of financial product. So it makes bank accounts, it makes payments, it makes loans, it makes investments, it makes insurance policies using a different system. And the system happens to be it happens to have the characteristics that were described, right? So it's trustless, it's distributed, it's decentralized. But what it does is it delivers to you your financial services by essentially creating them in a vending machine of sorts. And the reason we can have all this financial software making financial products on Ethereum is because of the topic, which is Web3. So the network matters, and what the internet was able to do was digitize information. But digitizing information works for media. It doesn't necessarily work for true digital assets. So for example, if I have a physical euro and I give it to you as a financial asset, like I don't have it anymore, but you do. And the fact that in the physical world, the physical object has scarcity and then there's property rights associated with it, that's just sort of normal human behavior. If you were to digitize that in an electronic way and put it on a bank ledger or in a spreadsheet, it wouldn't mean very much. Like you have all these systems that have to create the illusion that there's some economic activity. Whereas if you are creating assets that are native to Web3 or to blockchains or to Ethereum in particular, these assets have the property of scarcity the same way in the physical world the bill has the property of scarcity. So if on Ethereum or on on the Bitcoin blockchain, I send you Bitcoin, I don't have it anymore and you do, and that's backed by the property rights and the mining activity that's actually happening on the network. In Ethereum, you happen to be able to write software on it, and so Web3 is all software that is able to take advantage of this property, of embedded property rights, of financial infrastructure, of value transfer and settlement that's baked into the network itself. So unlike the web, which is fantastic for information exchange, Web3 is there to create digital economies and digital financial infrastructure, which can have digitally native assets move around and be used and create new economies.
Great. Okay, so it seems like the thing that Ethereum is adding here is the scarcity that our economies and financial systems would run upon in the real world, but that isn't really possible in the traditional web, which would be Web 1.0 and 2.0, I'd be assuming. Okay. And Gustav, just kind of running with that, would you agree? Because I know there's so much talk specifically about Ethereum, and maybe some people haven't heard of that word as much as they've heard of the word, for instance, Bitcoin. So people might be wondering, what's going on here with Ethereum? What makes it different? Why is that the platform? And we just heard, the network matters. So is it because, like Lex just said, you're able to write software for it? Is that what makes it unique? Is that why it's the platform to use for DeFi in general and for these kinds of applications?
So I mean, I definitely agree with a lot of the things that Lex said, and I think what it really comes back to is that it's not necessarily Ethereum in itself, but it is the opportunities that Ethereum provides, right? So to this day, like Ethereum is not unique in the sense that there are other blockchains that can do similar things, right? But what really was the big breakthrough of Ethereum back then was that Ethereum really introduced smart contracts. Smart contracts is a way I saw that the first speaker, now I lost her name, but she also talked about smart contracts, which is basically a way for you to automatically settle based on conditions. So with Bitcoin, you really introduced just the settlement process. So you had global transfers all of a sudden, and you could send money. I could send money to Lex, I could send money to you, Serena, and it will be on the blockchain. However, let's say that Serena, you and I, we were supposed to get a reward depending on a trade I did with Lex. This would be pretty complicated in Bitcoin because you didn't really have a trustless way of doing it, right? However, with Ethereum, we could write a smart contract that would be able to do the settlement for us in a trustless way. All the three parties could go in and review the code in the contract beforehand, and then it would basically be like if A and B happens, C happens. And in that way, then you all of a sudden you had these ways of doing automated executions of transfers or settlements, right? And that was really a concept that Ethereum came in and introduced. They were the first ones around with this capability. However, for example, Maker DAO as a project was actually idealized and conceptualized pre Ethereum launch. So you could say that back then there wasn't really a lot of alternatives for us to pick Ethereum now, right? But like today, even to this day, even if they had this first mover advantage where a lot of the projects just simply went with Ethereum because that was like the best that was available at that time. Ethereum has really managed to get like a lot of scale behind it. It's by far the blockchain with the most activity, the most economic activity, even contrary to what some people say on Twitter. So right now it's really like the most developed ecosystem, and you can see they for example have Consensys, which is a consulting company who also does a tons of other things that just focuses primarily on Ethereum, and just like Ethereum is just the place with like the most infrastructure built out. There's some other downsides to it being used so much, which is, for example, that it's a little bit expensive to do transactions at the moment, but in general it's just by far the most developed blockchain. And I think for a lot of these projects where we see, for example, DeFi, where you really need a network as the counterparty, right? You need a network to go and interact with the system. If not, it's not going to work. Then you're going to go with the best and the biggest bet, right? So, for example, we have seen projects that imitate Maker's technology, but on the blockchains. But there has really been no remarkable success behind any of them, just because there's not enough activity on the network to really substantiate them being there, I think, in my opinion.
Mm-hmm. Okay, so seems like a lot of the activity is happening on the Ethereum platform, and it makes sense that Consensys would be working primarily on there, right? Because I mean, correct me if I'm wrong, but the founder was a huge contributor to Ethereum originally, so that would be kind of his ball game, right? And I'm kind of curious, since there is so much activity going on this network in particular. And it seems to be moving very quickly. I mean, it's just been a few months, but DeFi is, I mean, I was checking DeFi Pulse recently, and it's at nearly $1 billion, and it was only at like half that amount a few months ago, right? So it seems like there's a lot of growth happening. Would you say, Lex, I'll address this one to you. Would you say that the regulation is kind of keeping up here with the activity as it's growing? Or, the previous speaker was talking about regulation in the cryptocurrency space in general. And we're talking about how it's very quickly regulated. Do you think that's the case from what you're seeing on the work you do? And do you think it's moving too quickly, not quickly enough? How would you characterize the regulation in the space?
That's a really difficult and partially dangerous question to
Oh dear, I'm sorry
for me
about that.
for me to speculate on. I would say the regulators differ very much by jurisdiction, and they have very distinct motivations. So in many mature economies, the approach to regulation is we have a framework that already exists for financial instruments. However, that applies to whatever it is that you do is how we're going to continue doing our decision making. And so it's the key word would be technology neutral approach, meaning I don't care if it's on a blockchain or not. You demonstrate custody, or if you don't demonstrate custody, you can't advise on assets, and so on and so forth. There are other jurisdictions which tend to be smaller and are trying to use crypto-friendly regulation in order to drive business activity locally to where they are. That seems to kind of bounce around. So early on, Switzerland was seen as very friendly and now has matured its stance. Japan and Korea have matured their stances. There's still a bunch of stuff going on in Malta, I'm sorry. And so it's kind of moves in terms of where the most advantageous place is. And then, of course, there is China and its national prerogative in setting up a controlled government blockchain at scale across multiple countries. So there's really a patchwork. It's hard to say, with one brush. That said, most regulators have gotten their hands wrapped around the core crypto assets, Bitcoin and Ethereum, and maybe the next 8. And they've created taxonomies and categorizations of what those mean. The second order question is, okay, what is it that you can do on networks? So they've gotten their hands around token offerings. Over the last 2-3 years, they've gotten to a conclusion around which tokens are equity, which tokens are not equity, which tokens have use, which tokens are have utility or not, and so on, generally speaking. And so token offerings have been done. I'd say stable coins and central bank digital currencies are now being processed, and there are frameworks that are starting to emerge around those, although I don't think that process is really finished and complete. And then for DeFi, we're really at the very, very beginning. There is a natural tension in how regulators understand financial instruments, and then how blockchain-based networks and DeFi in particular builds products, which just make it super confusing. So you'll hear the word non-custodial a lot in the DeFi space, and it's all about like building software, throwing it up on the network, and letting people, again, use it as the sort of distributed vending machine for financial product. And so the projects will make the claim that they're not providing financial advice, even if they're providing asset allocations and pie charts to clients, for example, because it's just software out in the wild beyond control, and people are using that without relying on some third party. I think regulators are going to, that's going to come to a head. It's unclear how that's resolved. It took about 1.5 years for the ICO stuff to get resolved, and I think hopefully DeFi will find a much better path through that question.
Okay. Sorry, I may have asked you a bit of a spicy question, not my intention. Okay. All right, then I may turn us to a slightly less spicy topic to move on then. Gustav, we just heard Lex bring up the idea of tokens, and that's another word that is super commonly heard in the space. And I'd love for you to just explain a little bit what that is, and then what some of the applications that you would see are, because it definitely seems like an interesting idea from what I've seen. Would be cool to hear you talk about it a little bit.
I mean, I guess the question is basically, what is a token?
Plain and simple. A lot less controversial, I think.
Yeah.
Than the last one.
So let's just take like the standpoint in like Ethereum, right? So, for example, you would have like, Bitcoin is like a coin, and like you would also often categorize, if you have like a blockchain that is only focused on like one asset, or you would, for example, like Bitcoin or Litecoin or these things that would often be categorized as a coin, or Ether, which is, also like the underlying fuel for the blockchain of Ethereum. But then you have something on Ethereum, which really has come out that, since you have these smart contracts that I mentioned before, then all of a sudden you also have the ability for them to create outputs, right? So the outputs in this case would be like a token representing something in like a system of smart contracts or in a single smart contract. So for example, in the Mega system, right, we have 2 different tokens. We have the DAI token, which is our decentralized stablecoin, and we also have the Mega token, which is our governance token. So basically, these are very, very different, assets, and they hold like wildly different properties. So, one of them is a governance token. So, a token that basically gives you a representation of a vote inside a decentralized system. So, if you have these tokens, then you have like the ability to go in and actually participate in a decentralized governance community and help them make decisions. And then you have the other one, which is, our DAI token, which it is an ERC20 token, but a lot of people would categorize it as a stable coin as well, as that is, something that is more used in that sense. Of other like token types, it's really because you have these kind of like token standards on Ethereum. So for example, a lot of the tokens that get issued there are lying under, for example, the ERC20 standard, which is a standard for a generic asset. There's also something like the 721, ERC 721, which is not for generic assets, but for unique assets, such as, for example, let's say you have an artwork you want to put on the blockchain, or you have a house you want to put in the blockchain. That would often be put into these boxes of being, like uniquely identified assets, right? Out of the uniquely identified assets, there also springs off, which is where the most security tokens are. Security tokens is digital representations of financial securities, for example, living on the blockchain. These can also be generic, but we see a lot of them being issued under the 721, or even another standard, which is even higher. But it's basically now, like the tokens on the Ethereum network often live under these like categories of like some characteristics that they have, that they're, for example, generic or that they're unique. And the cool thing about Ethereum is that since everything is connected in this way, right, that means that, these assets can move around the network, without limitations. Some of the security tokens have some restrictions in them. Of course, you need to be an accredited investor. There can be some kind of like, whitelist or something that they will be running. But most of them are like freely transferable. And that also means that, for example, the DAI tokens that we have coming out of the Mega system, they also fit into, for example, the MetaMask wallet that Consensys built and can be used in a variety of different applications. And since all of this lives, as software directly on the protocol, everything is public. That also means that, we don't even need to interact with people for them to, for example, integrate DAI, our stablecoin, into their own products. So, as much as, I for example, go out and pitch and guide and help and provide, clarity on how to work and integrate and use DAI in their applications, we also see a lot of applications where people just, integrate DAI by themselves, without even talking with us. Especially some of the more established players in the space, I think that's one thing which is really, really cool. I just want to make like a quick reference to a project, which is a great example of when you have these building blocks that's just available online that anyone can kind of like make their own applications. So there's a project called InstaDApp. We don't need to go into too much in details about what they're doing, but basically there was around like a year and a half ago, there was a hackathon in India, which is basically where people, they come and they sit for like throughout the weekend and they build some kind of like product, right? So these two guys, two brothers, Indian brothers, none of them have a college degree. They showed up this weekend and they basically built a product that allowed you to go from Compound, which is another popular DeFi application, Automaker, whatever was cheapest. So you could basically just switch your assets between those two protocols. And these guys built this in a weekend, and afterwards they had a lot of good feedback. They won the hackathon, they got a grant, and they never had to ask anyone permission for how to build this or what they were doing, right? And they just managed to raise, I think it was around $2 million, actually, with Consensys being the lead investor in them end of last year. And this was, just like a very good example of someone who they didn't even have any context in the space, right? They just showed up at this event here, and then because everything is these, people often refer to them as like Lego blocks or building blocks, then they could just take bits and pieces of what they thought was fitting quite nicely together, and then they build a product out of it and manage to enter themselves in the space, right? And this is something we see a lot because everything is available. So there's a lot of these like front ends, basically websites or applications, mobile applications, where they draw a lot on the infrastructure, such as, for example, what we have built and what other projects in the space has built. And then all of a sudden you can start offering all of these services that other people and other projects have spent thousands of hours building, right? So I think that's one reason why we really see, the growth of, for example, DeFi and the Ethereum space really accelerating, because the more applications that gets built, the more opportunities that are out there and the more things you can put together, right, to make new products. And, I think the innovation we see right now, especially within financial products in Ethereum, is completely outstanding, right? I mean, it's really amazing, so many things that's getting built.
Yeah, there's some really, it's really almost exciting to see so much growth in this area, especially when it's something that a lot of people don't even know is there, but all of a sudden there's so much growth. And before I move on, I'd love to ask Lex if you have any other exciting analogies for us in terms of how we can visualize what a token is. We'll even suspend our disbelief and pretend we're not in a pandemic, if it would help in any way. If there's anything you'd like to add about tokens.
Yeah, so I'm probably going to get called out by somebody more technical than me. So my analogy is the token is what the hyperlink is to the web. So in the web, the token links information together and refers to something else and incorporates it. Whereas in Web3 networks and in in DeFi and I mean any crypto native system, the token is a reference either for it's not a it has context around it. It's not sort of meaningless. It's not abstract. It's not just you're pinging back and forth a bit of code. It refers often to things that are outside of the token. So the reason DAI is fantastic, there's a whole bunch of context around it being a crypto asset that is stable, therefore a stable coin, and the algorithms that make it pegged to the dollar incorporate the value and the stability and the knowledge of it that everybody has into that token, that they're comfortable and familiar with the dollar. Similarly, if you look at, for example, digital assets, which are equities or bonds or any other instrument that is a regulated instrument, but is riding on the blockchain rails, like the token itself has very little information about that security or that equity. It's primarily it's 1% reference to all the information that sits outside of it. And so I think in today's world, tokens are again, these sort of shortcuts to much deeper context. But what we're seeing over time happen is that more and more functionality is getting added into the tokens themselves. And so the software that used to apply to a stock trade, or that used to apply to money in a payments processor, or to a loan in underwriting software, is getting built into the network itself, such as projects like Maker and Compound, and PyDAO and Set Protocol and Balancer, and so on and on and on, and the decentralized exchanges and so on. And so the software that used to be outside the security or the token or the financial instrument is getting built into the network, and is now just part of that sort of the texture of the infrastructure on which the asset is getting moved around. And so I imagine within the next decade, we'll essentially see all the different functions that used to be external to these tokens being applied, being open to everybody, and being built internally to the rails that they travel on.
Mm-hmm. Okay. Thank you. This one wasn't pandemic sensible, so this one was topical even now. Thank you.
I know. I got through it.
We appreciate that. I've got someone here with a question, and I'd love to hear your take of it, Gustav. Your take on it, Gustav, and then we can turn back to Lex and see what his thoughts are. But someone's here asking, would tokenizing assets generate asset bubbles, actually? So like the price of a painting going too high. I know that's a commonly used example, is for instance a piece of artwork being tokenized and then owned by various people. Is that something to worry about?
I mean, like I'm a big believer. I don't know. I think my cam froze, by the way. I don't know if it's just on my screen.
It may have done, but we'll hear you. Yeah.
Okay, perfect. I just need to make sure that you can hear me. I mean, I think that depends on what, I mean, what you necessarily think is why would that would be a negative thing, right? I mean, I'm a big believer in the free and open markets, and if some people want to tokenize a painting and they want to sell it, and all of a sudden these tokens get like outbid and crazy bid up, at an auction, or I mean, I think that's up to the people who are sitting on the other end and buying it. So I wouldn't necessarily say, I don't think, I wouldn't believe that I wouldn't see that as a bad thing. Like whenever you have something that is pricey, that's because there's someone on the other side buying it, and like as long as you don't like alert people into things where you trick them, or you in other ways apply like fraudulent behavior to for it to take them to make that decision that they want to buy it expensively. I think that the markets will settle out these things, and I at some extent I could imagine, and I do agree that let's say that you would have like the first time you would get like, let's say, very expensive art, let's say pieces from like very renowned artists onto the blockchain, and you would start tokenizing them. You could maybe imagine that like the first two pieces or something would get some crazy pricing, because there would be like a potentially a big appetite in the market. But over time, I think these things completely settle down until themselves, and we've seen time and time again that the free market forces will settle things over time. So I could see that maybe it could happen, but I'm not sure it would be a bad thing.
Mm-hmm. Okay. Well, thank you for answering the question. I'm sure the viewer will have enjoyed that question being answered. I'm getting a thank you from them, so thank you for that. And I'd love to ask Lex now. Actually, I've got a question. Since you had some background outside of the DeFi space, I'm wondering, how do you see the dynamic between DeFi institutions, if you can really even call them institutions, right? But how would you see the dynamic between DeFi, I guess, as a space, and then, the incumbents or traditional financial institutions? Do you think that there's a tension there, or do you think that there's possibility for partnership? How would you, I guess, characterize that particular dynamic moving forwards?
Sure. What's a helpful framing? If you look at where most financial institutions are today in their engagement with blockchain initiatives, it falls into two buckets. The first one is a question of whether clients of those financial institutions should be holding or trading crypto assets, right? So should I put Bitcoin or ETH or etc. into the portfolio of my client? that's a question that's primarily answered through like custody providers, exchanges, and so on. That has little to do with what DeFi is selling to financial institutions right now. And then the second initiative is around, can we use blockchain to make our operations more efficient? And if you think about gigantic grinding gears for the financial services world, where for NASDAQ in the stock markets, or for some gigantic fixed income trading engine, or for some wholesale money movement engine across the world, can use blockchain to reconcile or replace chunks of the infrastructure. Neither of those questions today, I'd say, are as exciting and as sort of innovative as DeFi is. I think they're useful, but they're steps towards adopting the first bits and pieces of what crypto does, and not yet fully grokking or understanding what's possible. And I think what's possible in DeFi and on Ethereum in particular, in writing the software that is really orthogonal to what financial incumbents do, I think is going to take some time. A nice path in would be to basically build bridges between traditional capital and the various asset classes that are being stood up on DeFi. And there's a project called Centrifuge, which lets you put in some real world stuff into a SPV and then bridge it into an intermediate thing and then bridge it into DeFi. And so there's movement in that direction, but I wouldn't say there's yet a concerted understanding or engagement with from the large financial incumbents on what DeFi does. For me, and I've been involved in financial services technology innovation for a while, and looking for something fundamental and truly different and truly disruptive. Like, I've just never seen anything as fundamental and interesting as DeFi happen to the industry. And so I don't know if we've necessarily landed on the model that's going to work for both Barclays and Maker. There's quite a gap there, and potentially that design is on purpose to be orthogonal and different. But I think if we want to end up in a place where billions of people use DeFi for their banking needs and for their payment needs, there's a lot of work in order to make those two combine. We're still in the very, very early stages.
Well, thank you for that question. I personally was kind of curious to know about that, since a lot of people watching might be students, so they might be a lot more comfortable or have a lot more knowledge about the traditional institutions. They might be wondering, I guess, how DeFi fits into the picture. But I guess, like you said, there's a lot more development to go. So, that's a picture that's still really evolving for everyone. So I guess now, as we're rounding up nearly at 7:30, I guess I just ask you, some final questions. I'll start with Gustav, and I'm wondering, is you're in business development. What are you excited about, or what do you see as a challenge you have to overcome in your role moving forward? Something you just like to leave people with as something, to look out for.
I mean, I'm of course excited about starting to travel again. No, I'm just joking, of course. I mean, I think some of the things that we have really seen. So from I joined Maker, it was in 2018, and back then, just like the sheer amount of time and energy we had to put into just getting like pretty simple integrations with other crypto companies was a lot. So back then, it was way more difficult for us to really get some of these like bigger partnerships going, these like big integrations, and I have seen that this is becoming like increasingly more easy for us, as well as us being able to have conversations with big traditional companies, publicly listed traditional companies, actually being able to have conversations about them being positive about us, for example, passing their compliance department. Things like that is something that we really that at least makes us very, very excited about what the potential is to come, right? I mean, I feel like we're at the point now where we have proven ourselves in the DeFi community that this is something that will stick around, something that will grow a lot over the next upcoming years. There's a massive appetite for this, and we really go in and we can service a segment that isn't wasn't really being serviced before, right? DeFi has really gone from something which was mostly like big whales and early Ethereum adopters, who were sitting on a lot of Ethereum, who wanted to leverage up their positions or spend some of their money without selling off their Ethereum, to really being able to service like a lot of like normal people as well. So lately we've had like a very, very impressive uptake. For example, in Argentina, we are at the moment doing around 5 million DAI a week in peer-to-peer volume in there. We have around 30,000 active DAI users on a single platform. So seeing kind of like these things here getting pushed forward is something that really, really makes me excited for what's to come.
Yeah.
And then we also, we recently hit our live integration number 650. So we still have so long to go, and as Lex also said, we're so early still, but we still almost have we're coming up on 1,000 companies and projects that uses our technology already, and that's something I'm sure that like over time this will get pushed forward to like a stage that I think we will have a hard time imagining now.
Yeah, and I'm super pleased with how you came back to Argentina on this. It really came full circle. So I'm happy that was kind of the arc that we're gonna, end that particular thing on.
For example, I mean, even though of course I live in Denmark and I'm Danish, I would be fooling myself if I said that Denmark would be our prime and most optimal market, right? People here, are simply just having too good of a life to really start using these services in like an everyday fashion. But there's a lot of places out there in the world where we can make a huge difference, and that's just what we're going to be working towards.
Well, I am all for that. So thank you so much, Gustav, for kind of rounding it out in that kind of bigger picture way. So I guess my final question is just going to be for Lex, if you'd like to leave people with anything. And I suppose, as you're doing the marketing on this, if there's something that I think would be interesting to leave people with as well, is just, what is the hardest part for you when it comes to marketing? What are the challenges you're overcoming when it comes to selling people on DeFi and on this new innovative way of doing business and on finance this way?
What's the hardest thing? Everything's super easy. It's nothing's hard. I don't know. I think for anyone with an entrepreneurial mindset, and I guess for the students watching this, right? Like you could choose different paths in life. You can choose the life that the water is taking you down a particular path, and it feels natural, and that's where everybody's going, and you kind of join, whether it's the recruiting funnel or anything that you think about, sort of what the accepted, prestigious, desired things are that everybody gets attracted to, and that's maybe the natural path, the path of least resistance. And then you can choose a path that requires you to persuade people and argue with people and define your own thinking in more specific ways and really work on building a path kind of step by step and putting the bricks on the ground yourself. And I think there's benefit to both. People can lead, you can choose the sort of life you want to lead, and all I would do is just encourage people early in their careers to take the risk on engaging with something that is not yet mainstream but has a lot of growth potential and promise, and to not wait for permission from employers, other established firms, sort of peer pressure functions, not wait for permission to either work in a space that you find interesting or engage with it. Because by the time that permission is given, the initial opportunity is really often over. And so if you're able to work with or learn about or put your money into the various projects that are being built out on decentralized finance infrastructure, not only is it massively intellectually interesting, and you might lose some money, you might gain some money, but if you invest your career early on in this space, I think it will pay amazing dividends for the type of society we're going to live in the next 15, 20 years.
Great. Thank you. So I think that rounded it off pretty beautifully. So I'm going to thank you both so much for having joined in on our virtual webinar, and hopefully, you were able to get some enjoyment out of talking to some of our members and some of the people who will see this later on our YouTube and on our Facebook, who maybe couldn't catch it live. And I'll just thank you very much. And hopefully we'll be able to talk to you guys soon with us at UCL FinTech at some point over the upcoming academic year. If there is still an upcoming academic year, we'll have to see. But thank you so much, Lex Sokolin and Gustav Arentof, for being here.
Thank you, Serena.
My pleasure. Take care.
Yeah.
Thank you. So just a really quick goodbye and a quick thank you to everyone who's been watching and everyone who's been involved. We're going to leave you with what we'll be talking about next week. So we're going to be talking about ESG and Finclusion. So some of the socially positive impacts that we can apply technology to. And another huge thank you to all of our speakers. And we will hopefully be seeing you all next week. Thank you so much for tuning in.